Okay, there's gold. Holy shit.
I'm still very bullish gold. I'm getting over concerned in the short term that it's getting a little too hot, a little too overdone, but it's in trailing mode for me.
Either way, whoever gets into the White House, they're going to spend, period. And the Fed is going to print, period. It almost doesn't even matter if Donald Trump wins because he can't fire Jerome Powell, but at some point Jerome Powell will be out. And what's going to happen? He's going to put in a Treasury Secretary that's going to say, yeah, we're not going to issue as much. We're just not going to pay our bills. It's not going to happen.
Say one candidate is good for gold, Trump. One candidate is great for gold, Kamala Harris. Bitcoin supporters at present, and we have what I thought was a small Bitcoin position because I amassed it several years ago, and now all of a sudden it's not so small anymore as Bitcoin hovers around, 63,000. So it's enough for me to actually give a shit about, so I care. We're looking at Bitcoin because I'm personally excited about a new product CME just launched, which is the Bitcoin Friday futures contract.
Have we broken a significant pattern to the downside yet? No, we have not.
Bitcoin's a tail. In other words, it's not going to pull Nasdaq down. Nasdaq seems to pull Bitcoin down. The oil market has matured to the point where there actually has to be a disruption, not just the appearance of a possible disruption. Now, the oil market has not historically been this mature. And by mature, I mean they freak out all the time, right? All right, so anyone who watched me on Bloomberg yesterday, dump your Walmart, but keep your Dominion.
This is the Futures Edge. I'm Jim Murio. That's Bob Iacino. That is it's the first show of every month. That's Mike Arnold, who is the Chief Technical Strategist for Path Trading Partners. Good friend of the show, very good at what he does. First, I want to thank all you guys for tuning in. Without you, this platform will not work, and it is working fantastic so far, fantastically, whatever the word is. Bobby and I were in legacy media a long time. Didn't like the way they pressured us into certain opinions. Now we want to give our own unfiltered opinions. Thank you guys for tuning in. Michael, how are you?
I'm doing well, Jim. Thanks for asking.
Good. And for you guys watching too, and hopefully we get this show turned around by the end of the week because the S&Ps are at a absolutely critical level, flirting around with the all-time highs. We are going to start on Bitcoin for a couple of reasons. Can we get a Bitcoin chart up real quick or no? Okay, while he's sharing it, Bobby and I are both... Are we Bitcoin enthusiasts or we are Bitcoin like weekend enthusiasts?
I would say currently we're duffers. We're Bitcoin supporters at present.
We're Bitcoin supporters at present, and we have what I thought was a small Bitcoin position because I amassed it several years ago, and now all of a sudden it's not so small anymore as Bitcoin hovers around 63,000. So it's enough for me to actually give a shit about, so I care. We're looking at Bitcoin because I'm personally excited about a new product CME just launched, which is the Bitcoin Friday futures contract. And Bobby, I want your opinion on this before we analyze Bitcoin real quick. This is going to be a weekly contract. Great. At any one given time, there's going to be two. So each one, when it's launched, has 2 weeks and 1 day in it. So for one day, Thursday to Friday, there'll be 3 available, but then most of the time there'll be 2 available, the next Friday and the Friday after that. But that's not what I like about it. What I really like about it is that I think the first contract the CME ever lost was 5 Bitcoin per contract. Well, obviously that prices out most of the retail trader. Then they went to 1/10, much better step. Now this is 1/50th. This is so retail traders can, the capital efficiency of it and the way to be able to learn how to trade, hedge risk in Bitcoin without risking your entire cash supply, to me is a big thing. Bobby, what are your thoughts on the product?
Yeah, like you mentioned, that first contract's about $310,000 per contract right now in terms of the notional value.
Right.
One of the things I like about this, and one of the reasons that the contract actually exists, is what happens with futures contracts. If you've been looking at them as long as really the three of us have, you have contracts that are pretty far off the asset that they settle to, the underlying asset, right? And that's because they're futures, right? They're where the futures market thinks they're going to be in the future. And as you get nearer and nearer to expiration, they converge in their price. They come together closer to the actual price till the day comes that they expire. With only 2 weeks to expiration, This futures contract is going to look much more like the index that it settles to for the period of time that it's in existence. So people can kind of take out the where's Bitcoin going to be 2 months from now, 3 months from now, and actually be able to dial in hedges and even speculative trades with a lot more accuracy versus the cash contract. I think that's groundbreaking. And because it's so small, the retail trader can do that, which is something the CME group has focused a lot on lately. Remember, they sort of had trouble with the FX market 25 years ago because it was just too big for the people who were now trading it. The CME's really turned a corner on creating products and launching products that retail traders can actually A, understand, and B, trade frequently.
And by the way, I'll add too that it's called BFF, the Bitcoin Friday Futures. Their most successful first day launch ever. 31,000 contracts traded in the first
for a crypto product.
Crypto product, the most successful crypto launch ever. Which, by the way, again, we love the CME. We've worked the CME a long time. We're not pitching this for them. We're pitching this for you, just because I think this is a product that's going to fit into your risk management style a lot better. Before we go to the chart, any last words on it, Bob?
Yeah, because you and I talk about active trading, right? We do talk about investment themes depending on who the guest is, but we're talking about active trading a lot. And when you've got something that's a futures contract where you don't have to put all that capital outlay, you can actually use margin to your advantage. A lot of people think that futures contracts, the margin allocation that futures allow you is dangerous. And it is if you use it irresponsibly. But if you actually trade within the context of your investable capital and you use margin correctly, it becomes much more valuable for a contract like this. And it becomes easier again to understand for the retail trader. So I really like this contract.
Amen. So Mike Arnold, we got this is the Bitcoin futures, or Bitcoin, maybe even cash, whatever. It is clearly trending lower. Are you about to tell me it's going lower to test that lower trend line?
Well, we're in a corrective flagging pattern. We've been making lower highs and lower lows. Recently, the pattern's been broken. We made the big spike lows still the 5th of August when everything was making those big spike lows. We've made a higher low in September, but we still made a lower high versus the July. What I am watching for, two key things. If we close below 55K on a weekly basis, that will trigger the potential bigger pullback, and I'd be watching for the pullback even into the mid 40s would be the key support level if that were to happen. If the overall markets roll over, then we could definitely see the breakdown in Bitcoin too. Now, in the bigger picture, if that close does not happen, this is just a corrective flagging pattern, and we could make one more significant push higher, but that would put potentially in a major topping pattern if we were to take out the highs from March of this year. So that's where I would go.
That would be a topping pattern if we took out the highs from March?
Yes.
Okay.
A significant
because I was looking at that chart thinking if we settle above 70 and build a base there, then it looks like off to the races to me. You disagree with that?
We are in the setup based off of a number of things for a potential topping pattern, just like we still have potential topping patterns in the S&P that they have not been invalidated yet. So unless it builds a solid base above 74K and can sustain that for a period of weeks, then if that happens, then we could be off to races. But if it ekes out just a new high and then turns around and collapses back in, it could be putting in a major topping area. So that's where I would go into longer term trailing mode. Are we there yet? No. This is still just a corrective pattern where we could get an upward swing to retest those 74K highs. Now, it all shifts, though, below 55K on a weekly closing basis.
Okay, and so, but if we've talked about this before, -3 to +3 scale. Sounds to me like you're mildly negative on this, correct?
I'm still watching for a little more pullback in the short term, and then if we start taking out last week's highs, the week of September 23rd's highs, which on the cash basis are 66,550. If we start taking out those highs, then I'll shift into short-term bullish mode, and it will be about a 2.
Okay, excellent. Bobby, you have any questions on Bitcoin before we move to stocks?
Yeah. Do you guys still see this for both of you, actually? One of the things that bothers me is on big move days, Bitcoin still has a correlation to the Nasdaq.
Mm-hmm.
And that bothers me, right? Because like on today, and granted, prices have moved a lot. And again, you guys that are watching this, we filmed this about a week earlier than when you're watching it. It's October 1st when we're talking. But you see a correlative move between Nasdaq and Bitcoin when the moves are big,
right,
especially to the downside.
And
this was a day where
sense.
Nasdaq was down almost 2% on its lows. And, it recovered a little bit, but Bitcoin dropped as well. And it still seems to be that, well, Nasdaq is falling. So the people who own Nasdaq need to sell things that are up. So they sell Bitcoin as well. And they buy gold. And that bothers me as a sort of a safety, the safety quality that a lot of Bitcoin devotees consider. Does that bother any one of you guys?
Yes, but particularly when you look and why it trades that way. And I don't know if you remember, and I can't even remember who it was, the big tech trader we had on the show maybe a year ago. And he said at the beginning when institutions started trading Bitcoin, they just kind of threw it over to the Nasdaq desk because it was like guys who knew how to understand volatility, right? So now all of a sudden you got the same guys who are Bitcoin traders and Nasdaq traders. So the correlation kind of, even though fundamentally there shouldn't necessarily be a correlation just because it comes from the same desk. That made so much sense to me at the time when he told me. I wish I could remember who it was.
Mike, what do you think?
I mean, that's why if we start getting a significant market breakdown and then Bitcoin takes out that 55K level on a weekly closing basis, that's why we could get poised for that much bigger pullback. But I'd also be watching if the Nasdaq breaks down, if we trigger a significant topping pattern in the S&P, we could definitely see that continued pullback in Bitcoin. But have we broken a significant pattern to the downside yet? No, we have not. I mean, you could say, hey, let's go. We're rolling over on some daily and weekly cycles. So could we retest that 55K area? Yeah, easily. But until we start closing below that 55K area on a weekly basis, it's still just a channeling pullback. It gets more and more riskier the number of times it keeps testing this bottom line, the bottom channel line. And if that breaks, that's why I have that 55K level as the line in the sand.
And I want to reiterate that I don't think Bitcoin's a tail. In other words, it's not going to pull NASDAQ down. NASDAQ seems to pull Bitcoin down.
Correct.
That makes more sense.
And like you mentioned, Bob, NASDAQ closed down today when we're filming this at 1.4% approximately. Bitcoin's down 3.4%. So it overreacts even. The volatility is greater in Bitcoin, but on a percentage basis, it's down more than double the NASDAQ. So if you start seeing the NASDAQ really break down, I would, that's a major red flag for Bitcoin in the short term.
And that brings us full circle to the BFF, Bitcoin Friday futures. Because they are a smaller size, you cannot get wiped out because of that huge increased volatility. Because that doesn't surprise any of us at all that NASDAQ will be down 1.4 and Bitcoin's corresponding move would be 3.5. The thing moves a lot.
Can we do NASDAQ? Because, Mike, I need you to look at a NASDAQ weekly. I had a potential head and shoulders top developing on a NASDAQ weekly, and I think it's gone away, but I need you to tell me if it has or hasn't.
Yes, the potential head and shoulders top has, but it's still in technical double top territory. This little hitch we did in it did not invalidate the potential double top, which came up straight to the 87.5 harmonic, which is proven to be last week's high. Now, it had to qualify above 20,000. This is again on continuous contract, but we're in the DEES futures now. 20,075. And then once we hit 20,530 roughly, That put it into a higher probability potential. But the pattern could still get invalidated before it ever triggers. The couple key areas to watch in the short term, the major let's kiss it all goodbye level is if it closes below 17,351 on weekly basis. If we start closing below about 18,500 in the shorter term, and then it follows through with let me caveat that with a weekly close below that level, then you could really start seeing some downward pressure where we could retest those 5th of August lows. Until that happens, though, it's still technically in a bull market in at least the short term.
That's last trade is 19,973 in the futures.
19,970. Yeah, they're still the futures are still open. Yeah, 19,973, 19,974. Yeah.
Shit, man, I was writing up a thing earlier and it was trading 19,150. Was that the bottom end of that? Okay, wow.
Yeah, I mean, we bounced. If you look at the daily rotation zone, we came back down to test a very key support level, dipping into the rotation zone, right down that 21 EMA, and still closing above the key support level. So, I mean, this is just shorter term technical analysis for people, but that's why I watch this rotation zone, because if we start losing the daily rotation zone, I'll start watching for a retest of the bottom end of this channel, and then right where I said that level, right around that 18.5, and we were on a weekly chart before, look where the daily 200 is. And we've already chipped away at it a couple times. We start losing this 18.5 level, you've lost the upward sloping channel, you've lost the 200, and from a probability standpoint, we've closed below the 62.5, which then shifts the probabilities, again, not guarantees, but probabilities that we'd retest that August 5th low area. So that is the critical thing where I'll be looking, if we did get down below the 18.5, to start selling rallies and being very patient before buying dips.
Makes sense.
I want to point out to some of you watching this, part of the reason Mike starts with weeklies is because it is October 1st when we're talking to him. You're watching this on October 7th or 8th. So when you look at these levels and you go, well, we're at 19, whatever, and Mike's talking about 17,000 something, that's because we won't be talking to Mike for another 3 weeks, and you're already seeing him a week later. So these are larger, bigger picture levels, and they're very, very critical. Mike only goes over the critical longer term levels in these particular shows.
So my last question then about it then. The fact, putting that in perspective, this is almost like medium-term traders and investors levels as well, right? We're not talking about the hourly traders when we talk about those weekly bars, correct, Mike?
No, we're not talking about hourly traders, but here's where, even on, let's say you're an intraday or a swing trader, why I still look at these levels in a macro perspective, because as I said, if we close below that 18,500 level, it's technically 18,550, but 18,5 is easy to remember. If I'm going to be trading intraday or even holding overnight for 1 or 2 days, my whole since the probability shifted on the longer term and the medium term to more downward price action, I'll be looking more aggressively for those intraday short setups and less aggressively for the intraday buy setups. Okay.
Perfect.
So, and I'll manage the positions differently. For like, if let's say I get an intraday buy setup and we have closed below 18,500, I'm going to be much more aggressive moving up stops, and my targets are going to be closer. Whereas if we are below that level and we get sell setups, I'm going to give it a little more room to play out and extend my targets on the downside. So that's why these levels matter for me, even if I'm short-term trading, because my whole probability matrix shifts and I have to take that into account. I have to take into account the longer-term levels for my short-term positions.
Makes sense. Can we switch to S&P? Because I think we're at a critical level. Hopefully you agree.
Yeah, we are at a critical level. Let me clean up the chart real quick for a second, because this is still technically, even though it broke above July's highs, This has multiple topping pattern setups. One is still a potential double top, even though you got this hitch in there. It may be invalidated if we get above 5,871.50. Then you don't have to worry about the potential double top. However, until that happens, it's still in play, and we have multiple, including some Elliott wave stuff, at potential end of wave setups. They have not triggered yet. So could this market keep climbing higher? Yeah. In the short term, we're even above, if I clean up the chart again once more and just look at this, we're even above a very key support zone right around this 5,650 to 5,680. So if we started closing below there on a weekly basis, we'd be into the rotation zone again, and I'd start watching for a retest about 5,500 potentially. We close below 5,500, you start getting and then if it follows through with a close below 53.86, then not good at all, because that would shift the probabilities to retesting those August low areas and potentially trigger a bigger topping pattern that, again, could potentially take us back to the weekly 200. Has any of that transpired yet? No, and we're not even close to it transpiring. Besides, there's a little minor pattern right now which could take us back to the bottom of the daily rotation zone, but that still holds us above that 56, 60, 56, 70 area that gets critical.
So the 3 to 3, you're still very mildly bullish at all
mildly bullish. When you had me on last month, I was very mildly bullish. We closed above that 62.5 harmonic level. I got more bullish. Now I'm back after this run into mildly bullish again. It does not mean, it means for me, it's trailing mode and still taking buy setups, but not being super aggressive with the targets to the upside.
I want to look at crude. So again, you guys are seeing this a week later. So looking at this particular, not just this, but the volume, the initial volume in this. I can't see if you have volume on those charts, Mike, or
not. I can
but
put it on right now.
Well, this was the most volume. And again, it's initial volume, not confirmed volume, but this was the most volume since April 19th. So you don't have to put it on. You guys can take my word for it.
It is on right now. And
it's a massive outside range day. But we didn't quite blow through resistance, did we?
No. And this, if you look here, this resistance level that it came up to was the high areas from September 24th. Yep. And if you see this key support that held back in 5th of August, key support that held at the 21st of August, we rallied up there, confirmed it as resistance on the 17th of September, reconfirmed it, even though it slightly poked above it, but closed below that level on the 24th of September. And we came up there with the missile strike against Israel from Iran, and still have not closed above it. Now, in context of this, we also have a potential double bottom. If I flip these if it lets me grab the right line, if I flip the harmonics around, remember I talked about that 87.5 harmonic that the Nasdaq did? This came down with today's low, not quite there, but spiked down and reversed, as you said, Bob. Very high volume, outside key reversal day. That my warning signs, we close above, just call it 72, and then follow through in the short term on a daily basis with a close above 72.40. The probabilities have shifted to off to the races to retest probably that 77 to 78 area.
That's 72.40, a close above that? Because I'm looking at a trade here for sure.
Correct. 72.40. Now that could be done. I mean, well, from my perspective, based off this volatility and what's going on in the Mideast, if we start breaking above that level with momentum, I would consider doing something intraday. Again, not trading advice, but I would be looking at an intraday price action. And then if it followed through above that 72.40, then I'd be looking to follow through and turn that into stronger medium-term position that could run higher.
Bobby, I got a quick question for you.
Yeah.
Big day in the Middle East, and
Yeah.
it's carried live on TV. Yet we haven't really broken out of the range from the last couple of weeks. Does that surprise you?
I don't honestly know how to answer that, because I think the pullback surprises me a little bit. But as I said before, the oil market has matured to the point where there actually has to be a disruption, not just the appearance of a possible disruption. Now, you look at the chart Mike has up here going all the way back to July, which is showing up here. It's a massive down move, right?
Yeah.
And within that massive down move is a lot of shorts. And when you see the volume that Mike put up earlier, it tells me that a lot of this, I'm just sort of looking at this picture. And if someone said, what does this picture for today tell you, including the volume? A lot of shorts covered, a lot of new longs got in, and then they were speculative day longs that got out.
Right.
Now, do I have that as factual data? No. But that's what 30 years of price action, that's what this looks like to me. Now, when I look at the actual story, what bothers me about the story is, first of all, President Biden through Vice President Kamala Harris, when they were asked what their message to Iran is, Kamala Harris said, don't. Well, they did, right? They didn't listen. Most of the missiles were intercepted from what I'm hearing right now. None of what I'm saying to you guys is military fact. And again, you're hearing this a week later, but supposedly most of the missiles were ineffective because of the Iron Dome, right? So looking at a tweet from Eric Weinstein today, Iran, Israel, Ukraine, South Lebanon, Yemen, all in play at the same time. The U.S. has something like 11 carrier strike groups. At some point, this becomes opportunistic as the game theory goes multipolar, similar to when police forces or hospitals are stretched to surge demand. I have to believe somewhere deep down this doesn't end up being a retaliatory strike on oil fields. Again, just based on the price action. So am I surprised we didn't break it out? Yes, because the oil market has not historically been this mature. And by mature, I mean they freak out all the time, right? So I think there's got to be some sort of underlying, and you guys who are watching this can call me out because it's a week later, but I'm not long it, I'm not short it, I'm not involved.
I will be longing on a settle over 72.40 though, because I am looking for a spot to increase my exposure to oil, and that again, that might be in my medium-term portfolio and not necessarily a swing trade.
Yeah, go, Mike. What were you going to say?
And a couple things. To your point, there's still huge short interest in oil. Okay,
right.
If this triggers, besides this one-day move, if this really starts getting some upside momentum, you're still going to see a ton of short covering. We are against, I switched to a weekly chart, we're against major support levels that so far held. And if I zoom in, you can see very clearly the double bottom pattern against major support. So
you mean resistance, right?
Support. We're again of this 65 to 67.50 area that we just came off.
Yeah, I see what
major support.
I see what you're saying.
This is not so. I mean, this is something that could be potentially front run. However, if it doesn't follow through and get that close above 72.40, it could still keep trading in this range, come back down, retest support. If it keeps retesting support without something going kablooey in the Middle East, then, it could eventually break it. But in the short term, I have to lean on the side that if it triggers some of these bullish patterns, we could see some pretty good upside potential that could be rapidly accelerated by not just some intraday short covering, but some longer term position short covering.
Okay, there's gold. Holy shit.
All right.
Yeah.
Gold, we do have a short-term potential topping pattern if gold closes below 26.46. That would lead to a bigger short-term potential pullback. We're very overextended from the weekly rotation zone. The weekly rotation zone right now is at 2,600. Especially if we get a market sell-off because gold, when things start selling off, gold also will sell off because people will liquidate some gold because it's been such a strong trending thing and take some profits in gold to potentially cover some other losses. All this short-term topping pattern does is take us back to the weekly rotation zone. As you see, since we really broke out in July, weekly rotation zones have been buys. So, do we have a massive long-term topping pattern in place yet? No. Long-term, I'm still very bullish gold. I'm getting over concerned in the short term that it's getting a little too hot, a little too overdone, but it's in trailing mode for me. That 26.46 level, if they then follow through below 26.16 on a closing basis, I'll be much more patient with reestablishing any short-term longs. I would be shifting then to a more of a long-term trailing mode just because of how overheated it is. And it doesn't matter that it's gold or something else. When things get this overheated, you just have to pay attention because they can revert down. It does not mean it's a sell, but they can revert down quickly to at least reset and get to a more stable, sane level. Even if you get the bigger pullback, as long as 25.60 holds, it's still a long-term bull market.
Okay, so 26.40 is your level that's a nearer term. Close below it makes you negative, but 25.60 is the target there. It needs to close below that for it to be more serious. Is that what I'm hearing?
Correct. Yes.
Okay. The one thing I'd like to add before you jump in, Bob, is that one thing, and Bobby and I did a short about this the other day too. Both of us think the fundamental argument for gold, if anything, is getting more and more pronounced. That doesn't mean the price has to continue higher to the moon. A lot of these markets trade on market positioning, and that's why you move to the technicals, and then you maybe hedge some of your position. I have some decent of the call spreads I've been selling against it the whole time. Some of them have a lot of money in it right now, so I am naturally more hedged as we got higher. Now I have to decide what to do with that, but I am hedging some of my long golds and plan on buying it again at a lower level. But, we've made quite a bit of money on this. Discretion is the better part of valor. Bobby?
Yeah, I still, as you mentioned, I think it's getting more and more compelling to own gold, but I hate how high it is versus that statement, right? Yep. So I'm sort of in a hold situation. I would love to see some sort of circumstance where we got back down close to 2,000. I don't think we can get all the way to 2,000. 2,200 would be great so that I could buy more of the long-term holding gold, because I think even after the election, as we've talked about ad nauseum, you look at Mike's RSI here, right? And the election or any other sort of, that is an RSI, Mike, right on top there?
That is an RSI, yes. It's a 5-period RSI. Okay.
You notice the 5-period RSI, the last time that it sort of got in this territory was mid 2020, right? And we got a pullback, but wow, it was nothing versus where the RSI was, right?
Very shallow.
And then you look at the pullback down to oversold in like just before late 2022, and look at the rally versus the sell-off. Now, I'm not saying that's going to happen again. What I'm saying is the fundamentals to me line up with that same sort of a situation, because we are not going to get either way. Whoever gets into the White House, they're going to spend, period. And the Fed is going to print, period. It almost doesn't even matter if Donald Trump wins, because he can't fire Jerome Powell, but at some point Jerome Powell will be out. And what's going to happen? He's going to put in a Treasury Secretary that's going to say, yeah, we're not going to issue as much. We're just not going to pay our bills. It's not going to happen.
It's not going to happen.
So, it's very difficult for me to come up with a fundamental thesis for gold pulling back or even turning into a bear market. But when I look at this chart, I know it's going to pull back.
Yeah.
So I'm just kind of waiting for it to pull back to a level where I feel comfortable buying it again.
I say one candidate is good for gold, Trump. One candidate is great for gold, Kamala Harris. That's my opinion on the matter.
Mikey, any fundamental thoughts on what I just said or what Jim just said?
I agree. I don't see any bearish case fundamentally for gold.
I don't either.
Period. But, from a technical standpoint, remember, we took off. We built a solid base all through mid-2020s, broke out in 2020, and got very overextended. This is a monthly chart. Came back. It took, a couple, 3 year, 2 years to build another solid base again, and then it finally broke out, after 3 years, and we've gone on a tear. We are at massively overbought, so this is not where I'd back up the truck to own more gold. I'd be watching for a bigger pullback, and you said 2200, which is roughly the bottom of the monthly rotation zone. So could we get there? Easily, if something were to happen. If we get a major market sell-off can also cause gold to pull back. That does not change the long-term fundamentals. It does not even change the long-term technicals. The only thing that would change the long-term technicals at this point would be a monthly close below 2,000.
And the fundamental case behind that, by the way, is we've talked about this on the show before. People sell winners when they have assets they don't want to dump out of. And gold's obviously a winner. The fact that parabolic move you just showed me is a monthly chart.
Yes.
We talked about it, Jimmy, somewhere else. I don't remember where. You said, do you think I should take some money off the table? I said, I think you should. I like what you're doing in selling call spreads. But if you were only holding futures, I'd say take some money off the table. And so far, it's a bad call. This is a monthly chart, man.
Yeah.
Come on, man.
The bad call today might not be a bad call tomorrow.
I just put up the monthly harmonics on from the lows before the breakout, the lows of last October to the most recent high. And remember, the probability shift, as I talked about on a close below 62.5, that level's at 2029. I mentioned 2000. So that is the absolute key level. And I have no concerns in the short term that we're going to close below that, but that is the very key level through multiple, whether you just go off support resistance, whether you go off the 50-month exponential moving average, or whether you go off the monthly harmonics. That's the major level. All reinforce the same point.
All right, so I'm going to say something here, and you tell me that you completely disagree if you do. For me, if we get down to that level and it holds and we turn back up, I'm liquidating everything and buying gold.
That would be a backup moment for me.
That would be a back up the truck.
First of all, no way you're doing that. You're not doing that.
I'm selling everything.
He's being over dramatic, people.
I'm going to
what
live
he's saying
in
is
a
make a
substantial gold bars.
Yeah. Substantial allocation. I like your notion of a substantial allocation.
There'll
be a cold day in hell before I look at it.
I'm buying all of it. All I can.
You're buying it all?
Can I throw a curveball? Jimmy, is there something else you planned on looking at? Or can I throw a curveball?
No.
Can we look at Intel?
Sure.
Again, Mike doesn't know I'm asking him to look at this. I have an opinion on Intel. And to be honest, I haven't looked at it in 2 days. Oh, it still looks the same. Look at that. You already have something on there.
Yeah, I already have Intel. Jeez. What do you think I am?
Before Mike talks, Bobby, what do you like about it or not dislike about it?
Well, I'm not sure I like it. I liked the short-term pattern that's already kind of, I don't want to say it's played out, but it's gone it's tightened your stop level, okay? On the daily, there was a little double bottom there, and it's already crept up to the area where I would tighten my stop, right? I'm not long it, by the way. This is something that on a live stream I did in the Q&A, guys asked me to look at it. I said, well, on the daily, there's a little bit of a double bottom here, and I'd be a buyer. But I look, at this level, I would tighten my stop, and we've reached that level already. And from here, and I haven't looked at it. And from here, it looks like we hit the first target, and now we got 3 days of pullbacks. Mike already had this on here, and I want to stress again, I did not tell Mike I was going to ask him about this. We just look at things in very similar ways, not exactly. But from a fundamental perspective, I haven't looked at Intel. I don't know. I liked the chart for a short-term trade. I wanted to see if there was a long-term conversion in there somewhere from the short-term trade.
Well, on a short-term basis, we triggered a double bottom pattern that went to the first and second targets already.
All right.
The key thing for me, let me switch back to the weekly chart, because look at this pattern on a weekly chart. Let me just clean up the chart a bit. So if you just take pure, we had the massive sell-off on their disastrous earnings. By the way, the liquidation value of Intel is worth more than it was trading when it was down here, in around 19. So if you were going to break up and sell off Intel just with their fab, and with their fabrication plants and the still technology they have, you'd get more than $19 a share. Now, you can see the double bottom pattern on the weekly, which has been confirmed on the weekly. And as long as we really don't pull back much below and close below 2185 on the weekly, it's still in significant base building mode. It is against a weekly rotation zone, so it's got some more stuff to prove. Now, the key line in the sand where I go, oh, it's going back to consolidation and I got to be more patient, is if we take it back and close below 2082 on a daily basis. If we close below that on a daily basis, the double bottom pattern's over. It went into the rotation zone. The rotation zone held, and now I got to go back to being much more patient and waiting for a stronger base to build on the short, or on more in the medium term. But in the short term, we definitely triggered hit the first target, which is stop reduction from my perspective, and the second target, which was partial profit taking.
Here's my question for this. Well, actually, if Bobby, you're done with this, because I thought that was interesting. I'd like to look at BMY, Bristol Myers Squibb, which, by the way, I'm neither making any recommendation about individual equity names. I do have some individual equity names on. I got it in this a couple days ago, and you guys can obviously see why, something I like to look for right there. So
I am recommending selling everything at that gold level. Is that level again, Mike?
And buying a Winnebago and go
buy a Winnebago
that
you fill up with gold, and you put lifts on it and bigger tires to hold all the weight of the gold.
You're going to need bigger tires, because gold's heavy, as we all know.
On like triple leaf springs, like you get in a monster truck. Anyway, go ahead.
Anyway, so you guys know the way I trade. You know what I look at. You know exactly where I put on the trade, and why. Mike, I want to know your opinion on my trade.
I mean, from the longer term,
where's my target? I have a bunch of calls.
It went up. It formed a multi-week base where we got the weekly rotation zone into a key level support. It's now closed above the 50, which it took multiple weeks to get closed above the 50 exponential. My next key target area is about 54 to 55. That would be an area I definitely look to raise stops from this bullish breakout, and possibly take off something, or at least raise stops. If we close above 55 on a weekly basis, next target is 60, and then 60 to about 62.50 is a major target area. If this continues, if it continues its power move up.
Bobby, so here's a strategy that I may or may not have done. Let's just say this guy I know named Bob, let's call him. So for every 10 calls he bought, they were like the 52 calls. The plan was to ladder step it up, like sell two, sell two, sell two, sell two, keep three, as a potential moving it into the do you want to own this name kind of thing for the long term and see what it is. Do you think that's a good way to get into a trade like this from a technical standpoint?
I mean, I don't do it, but I don't hate it. I've known several options guys, and Mike, you can speak to this if you choose to, that have said a lot of the times when you sell calls, you make the most money when you get assigned. And I'm not quite sure what that means, to be honest. Mike, can you speak to that at all?
You make the most money when you get assigned.
Yeah, I'm not sure what that strategy could be.
So you get assigned like when? Oh, yeah, okay. It's like, yes, I know what they mean. You get assigned when you're the owner.
When
you don't get assigned when you're
short calls, and then
because you go short. Yeah, no, I think when you exercise, I've had some good trades. I remember AMD a couple of years ago, a handful of calls, got out of some of the calls, kept a few, and then all of a sudden I still have them. You know, and that's what I'm hoping for a trade like this too. Because I look at that pattern; it's a long-term pattern. To me, it seems like it could have a nice little run on the upside, but I always like to check it with Mike Arnold first.
All right, well, I'll throw two more then. I was on Bloomberg yesterday, and I recommended two stocks to their audience. One was Dominion Energy, and the other was Walmart. I remember that this was it yesterday? Yeah, it was. Again, it was September 30th, you guys are watching this on like the 8th or the 9th or the 7th of October. It's October 1st now. So I recommended Walmart and Dominion Energy. Mike, what do you think of these?
Day late.
Walmart.
Well, I recommended it yesterday. Yeah.
I meant a month late. I was just like day late down
There's the
short.
monthly
Yeah.
chart of Walmart.
Looks like gold.
Yeah.
Looks exactly like gold.
Walmart fundamentally, I know they do well in a recession, but they're very, very overvalued, trading at a PE to 41 right now.
Mm-hmm.
Massively overbought. Monthly cycles pinned to the top. It's not. I would not be in aggressive buying mode. I'd be in, all right, if you already own it, in trailing mode, because this has just gone vertical, and in multiple ways. There's no sell signal yet.
Mm-hmm.
Okay. But, it's starting to peter out on momentum. So I definitely be in a trailing mode. And the key area I'd be watching is $78 if we start closing.
Before you go to Dominion, actually, my stop on this was 77.84. But potentially before you get into Dominion, when you're on Bloomberg, it's a fundamental thesis, right? They don't ask you even necessarily for a stop level. They ask for a target level, which I had at about $85 on this one. But the fundamental story to me is I do believe that inflation is going to rise and the economy is going to continue to kind of chug along, but inflation is going to catch fire again. I shouldn't say catch fire. I think 3.2%, 3.5%, somewhere in that range,
Right.
Which drives people into the cheaper stores. Right.
Mm-hmm.
So the Dominion Energy one, which is symbol D, is that what you got up here? Yeah. What chart is that? That doesn't look right to me.
That's Dominion Energy D.
All right. Anyway, was also part of the reflation thesis because historically, doesn't mean it has to happen now. If we get a reflative economy, energy is one of the best performers, and that hasn't happened yet. So obviously, either we're not in a reflationary environment, or we are in one and energy hasn't kicked in yet, which means I'd be getting in early on a thesis. So I still believe that we're going to be entering, if we're not already in, a reflationary thesis. So that's why I like Dominion Energy. So what do you think of this chart, Mike?
Well, I like the weekly chart a lot. I mean, as long as the weekly chart can hold above 54, I'd remain in bullish mode on this. The next key target is about 64, which would reconnect it with the weekly 200 and the 50% harmonic from the highs back in April of 22 to the double bottom lows that were put in of October 23. So on any pullback, even on a weekly basis, any pullback into the weekly rotation zone, and the bottom of the weekly rotation zone is about 54.50. 54 is very key for support and resistance level, so I just keep 54 in my head. That would be where I'd have to reevaluate. If we close below 54 on a weekly basis, I'd go back into the short to medium term bullish thesis would be off the table for me, and I'd have to reevaluate. But as long as those levels hold, I'd be looking for easily a target of 64 over the next few weeks to months.
All right. So anyone who watched me on Bloomberg yesterday, dump your Walmart, but keep your Dominion. That's what this means.
Don't dump Walmart. Just know it's got, when things go vertical, that it can keep going. But know where your at least take something off the table would be for Walmart. And see, Dominion, this is a very different chart setup. So I'd be looking, if you're going to take something off the table in Walmart, I might consider looking at Dominion on pullbacks. Hey, maybe there's some good. This could be something that runs for a few weeks to months.
I like it.
Okay, can I look at one more?
Sure. Of course.
Gotta have it stock over the last 2 years that has had a substantial pullback. I don't even have to say the name, right?
Nope. What do you got with NVIDIA?
Oh, I thought you wanted Tesla. Sorry.
No. The gotta have it.
See, this is why you get demonetized, Mike.
Right? See, you got monetized for jumping to the wrong conclusions. I think there's something here for me. Not for you people. I don't recommend stocks, but I think there's something here for me. Where and how do I do it?
I see consolidation triangle.
That's what I see too. So when is the next move afoot?
See, here's the funny thing. I did research back in the 90s and tested, and I've followed up with this since then, but I tested over between stocks and the future/commodity markets 10,000 triangle patterns on longer term charts. That means daily or longer, daily, weekly.
And you got
Triangle
nothing?
patterns are horribly inconsistent in terms of they don't hold up well. They're very close to 50-50 patterns for any substantial moves. And if you'd say, well, if this resolves to the upside, then it's only about 51.5% to where it favors an upside breakout. So that's why I do not trade triangle patterns. I actually make fun of them all the time. They're notoriously inconsistent. Now,
That's fine with me. I want your honest opinion on it. So there's no reason for me to be establishing a long in this at any point that you can think of?
the long thesis for me would be back above 130.
Okay. Is that the line you have right there?
Yes.
Can I just point something out here? Mike, can you draw the trend lines for the triangle here so I can point something out? And this is something that I actually learned from Todd Kobayashi, who I worked with at Nikko Securities way back when. He's the first guy to teach me charting, right? And I've since tweaked quite a bit of what he taught me. But essentially, you see those two bubbles on the top trend line there, right? That's Mike's points. He's got his initiating point and his defining point. Now, a lot of people think there needs to be 3 points to a trend line.
But you can make the wick of that green one your third one, right?
Well, no, I don't agree with that.
Okay.
I think in order to have a trend line that'll hold, you need 3 points. But I don't give a shit about a trend line that'll hold because I'm looking for trades, right?
Yeah.
So for me, if this trend line were to break out to the upside, the first target is the top of the red candle where the defining point is, right? And then it breaks out above there. The second target is the initiating point. And
Right.
that's as far as I can go with this trade. And so outside of that, because then it becomes a right triangle, right? And this is the problem I have with trading triangles is they have to be sort of quick trades within a medium term trading time frame and what that I usually trade in. So I just look at them as individual trend lines, even though together they form a triangle.
But if someone was interested in owning this for the fundamental reason,
If I was interested in owning it for the fundamentals, Mike, what would you say about it? Not Jimmy, it would be me.
yeah,
No, if it would be you, I tell
Okay, if it
you,
was somebody you liked, how about that?
I tell you, the 100 would be the line in my sand. $100.
you say the line in my sand? I like it. It's like my sandbox. Get out of it.
Well,
Right?
that is the line in my sand, though.
The line in my sand.
If you need sand, Mike, will get you a price. He's got a sand guy.
Okay, I got a
I
guy.
live in a sandbox. I mean, come on.
He's in Arizona. It's all sand.
I mean,
All sand.
you got.
By the way, I think
chip
you Arizona
plants
people
up
should
everywhere
thank
too.
me for my water. I send my water down there from my Colorado property every day, and I never get a thank you from Arizona. Why?
Because they send their vacationers there in the winter that keep your towns alive.
That's a good point. That's a good point. Let's call it, boys.
We're done.
Thank you, guys. This has been The Futures Edge. I'm Jim Muriel. That's Bob Iacino. Mike Arnold is our guest, the first show of every month, who's the chief technical strategist for Path Trading Partners. Thank you guys for joining us. There's a couple items of housekeeping. First of all, remember, Bobby and I, we're in the legacy media world for 25 years each. Had to get out of it for two reasons. We're always under pressure from overzealous producers and sponsorship money. We want to create a platform that is independent of the bullshit, and we think this is the best way to do it. It's working, and it's working because of you guys. All the DMs, all the support you give us, it's humbling. But again, it's about you guys too. You guys need this as much as we do to have people give their honest opinion. You can't argue that you can argue that Bobby and I might be full of shit, but you can't argue that we don't have good guests come on in both of our shows. This is one of them too. Also, thank you to our sponsor, Hardcore Italians. Support small business. It's a fun website that sells a lot of cool Italian garb that'll make you smile and make you laugh, and it'll be a great present for the Italians in your life.